It takes a second for YouTube and Zoom to become friends and connect and talk to each other. But I'll be having a link for you guys in just a second. Very excited. It's Friday. Gonna have a good time today. Let's get this going here. Boom. There we go. Boom. There we go. Let me just put this over here. And let me just switch this over. And I think we are good to go. Let me just share my screen here. I got to say, you do this a few times, you get pretty good at it. Hey, Dave, good morning. Welcome. Welcome. You're the first guy today. Robert, good morning. Happy Friday to you. We got Dave. We got Robert. War Dog is in the house, present and accounted for. Ivano, Dave, Chill, good morning. Dave, good morning. I've been getting very good feedback from you guys about these morning shows. People really like them. A lot of them like them as much as they like the VIP room. If you guys are enjoying the goodies here, please let me know. We got Tom, we got Zen Master, we got Kirk, we got CJ, we got Rick, we got Henry, Infinitely. Hey, Infinitely, Robert, Jody, Pat. We got another Robert. We got Wayne. Brian, good morning. We got Steve. Got a lot of folks here today. We'll be starting in just a few minutes. As soon as we have 100 people here, we will begin. And that usually takes me another 5 seconds. Timothy, thank you. Lewis, good day to you. JB, Dr. Serena's in the house. Richard's in the house. I responded to your email last night, Richard. Eagle, we got Eagle Beagle here. I love it. Good morning, Adam. Dave. All right, we got over 100 people. I've got a lot to talk about today. And remember, today's that big, big day. Not only do we have the employment report, but we have Lisa Cook speaking as well. What a treat, right? The big numbers, just to give you, oh, I already highlighted this for you. Look at that. Cam, good morning. Good morning. Robert, we got a lot of Roberts. Roddy, good morning. Hope Matt took good care of you. Steve says, what do you do is necessary for the trading day? I hope so. I hope so. There was actually one stock I needed to add to here and give to Matt. Okay. All right. So we're going to have a big report coming out. That report's going to come out in about 28 minutes. Eagle Beagle Press. Here is the numbers. We're looking for a consensus of about 182,000. Last number was 175. The employment rate is going to be very important today because the whole unemployment thing is starting up. The average hourly earnings and the private payroll. All of these numbers are going to be important, and we're obviously going to be watching the bond market. Yes, Matt is the man. Definitely the man. I got to say, though, he and I get really tired by Friday. Friday, we're ready for the weekend. All right. So the market is so far, getting into the report, the market is somewhat bullish. We've got a little bit of upside on the Dow. We've got a little bit of upside on the NASDAQ. The Russell, the small caps are down today. And in terms of the broad market, I can go, let me just, 1 second. I think I guess it didn't save today. Let me see if it, you know what? I forgot to save it. Huh. Go figure. Oh, well, we'll just have to do it together again. So as I mentioned, the market is a little bit firm this morning. Volatility, which we're watching for, is just kind of sitting there waiting for things to happen. There's not much there. The bond market, I want to talk a little bit about the bond market. As I mentioned, this report is going to be extremely, yes, helicopter gal, but not this morning. Ask me in the VIP room and I will. I definitely will. I'll talk about gold, guys. I'll talk about everything. I got gold, crude oil. We're just getting started. I promise you. Good morning, Duzzy. Nina, good morning, guys. So if this report is negative, if we're going to show that employment is slowing down, the bond market is going to rally. Why is the bond market going to rally? Because that kid's going to get ideas in his head that the Fed is going to start lowering rates earlier. The odds have already gone up. So it doesn't take a lot to get this kid excited. It does not take a lot to get this kid excited at all, okay? We'll be watching this. This will be the most important indicator, this indicator right here, at 8:30 in the morning. So this will be what we want to watch. This in the 30-year. The gold market. The gold market looks like it's still continuing to come. We had a little bit of an upside yesterday, but as I told you guys, we got to be really, really careful with gold, especially heading into the report today. Okay. Gold is down quite a bit. And again, we're just kind of trailing right at the VWAPs, the main VWAPs, and we're kind of trailing here. Let me just pull this up. So as I mentioned, we're just kind of trailing at the VWAPs and at the 50-day moving average. If we break this level, if we break the 2,330 level right here, if we break this level, the odds are we're going to go right here to the 100-day line. And what will happen is gold will look very similar to how the energy market looked. Energy, on the other hand, is starting to come back up. Now, as I mentioned, there was a huge value area here that we broke. We broke down, and I think we're going to have a resistance area here, and we're going to start coming back down. I don't think this is going to come all the way up unless there's some amazing economic news that's telling us that the U.S. economy is expanding, and it's not. So I think energy prices are going to be a little bit subdued for the foreseeable future. When I say subdued, I think they're going to be trading around this area here. I don't think they're going to be coming all the way up here. Why? Because look, these highs are getting lower and lower, and this is going back all the way to April. There's a definite shift in the price of crude oil. A definite shift in the price of crude oil. Thank you, Walter. I appreciate that. So, folks, the level you want to watch, I know it's been going up the last few days, but typically, usually, about 75% of the time, what you will see is you will see a pullback, you'll see a breakdown, and then you will see a test of the pre-breakout area or the breakdown area, and that test happened to be right around here. So there's a really good chance we're going to go right up to value, and we're really close. I mean, value is just between the 200 and this line right here. There's a good chance we'll just come right up here and either consolidate again, just continue going sideways again, or start breaking down again. And on the gold market, I wouldn't be getting all that bullish right now. Don't. Not a time right now to get bullish, especially if interest rates are going to continue moving higher right now. Because again, that kid, and I know a lot, not a lot. I got what somebody says, stop it with the kid and the bicycle analogy. But it's such a good analogy, right? Why stop with it? We can't really stop till at least July because that's when the decision will be made. I mean, doesn't everybody want to know how this movie ends? Don't you guys want to know if the kid's going to get that damn bike or not? We want to know the end of the story, right? So I told the person who wrote me in the chat yesterday, stop it with the kid and the bike. It's getting old. I said, no, it's not getting old. It's just getting exciting because everybody wants to know if that kid's going to get his bike or not. Don't you guys agree? Don't you want to know if that kid's going to get his bike or not? Right? It's like a soap opera at this point. Anyway, so I think that right now this is just. I'll tell you why. I know this. You're seeing a big run up in here because the kid heard a rumor. He heard a rumor on the street that his dad may be getting another job. Okay. And he got that excited about it. The truth of the matter is, economy doesn't change over 5 days. Okay. Of course you do. Yeah, there you go. That's the spirit. There we go. I knew you guys would love it. Of course you guys love it. One person said it. One person out of 500. There's always going to be that one. So Carlos says the kid's story helped me understand it first. Keep doing it. Helpful of course, very helpful. Of course. We're going to talk about seasonality. We're going to talk about seasonality on gold and crude oil today in the VIP room, actually. Richard, I scheduled Matt for that. So we'll be talking about that today in the VIP room. So again, let's good morning, Gaston. Welcome. So again, we got to watch this carefully. In my opinion, the trend is still down. And I think as soon as we hear from the Fed next week when they'll be speaking, good morning, Fred. As soon as they'll be speaking, they're going to splash some cold water on the kid's idea that they may say something like, let me give you a good idea of what we may be hearing. If the employment report is good today, really, really good, it's going to be good news, bad news, because that will undo this. Why is the market rallying right now? Because this report sucked. Because this report sucked, because this report sucked. This report and this report told us that there's cracks in the foundation of the employment. This report that we're going to have in a few minutes, excuse me, 20 minutes, this report is going to tell us if this report and this report are valid or if they're full of it. If this report tells us that there's a material slowdown in employment, the bond market will still continue rising a little bit. Then we have next week the Fed. We have CPI and PPI, and then the Fed speaking. And if the Fed says something like, let me just give you a scenario. And by the way, I just want to show you guys something. Not to be an ass, but here, let me just show you. You're supposed to connect the three lines, at least three lines. 1, 2, 3. Just don't want to scare anybody, but we got a really nice trend line here too, by the way. Just saying. Okay, look at that. 1, 2, 3. 3 lines makes a trend line. Hey, don't hate the communicator. I'm just pointing things out. So my point here is this, is that even if the market hurries up and rallies right now, we have Fed. The Fed is the parent, right? The market is the kid, right? And the Fed is going to say, hey, we're realizing that the last few weeks of data are showing that there may be a slowdown in the economy. If this continues over the next few months, we may be inclined to adjust our timeline. But as of right now, we need to see how things develop because employment has been really, really tight for a very long time. Unemployment rate, they're going to spin it. They're going to spin it. Exactly, Jack. They're going to spin it. So I think what the Fed is going to tell the kid, hey, buddy, maybe we won't be raising rates this year, and maybe we'll actually be lowering rates this year, like we promised in the beginning of the year. But it ain't going to happen anytime soon because we still need to figure out where things are moving. And it takes a long time to get rid of inflation, and this could be just a temporary bump in the road. That's what I think it's going to happen. And then the bond market's going to start coming back down. So I don't think we're entering a deflationary period just yet. I think we're going to start entering a deflationary period around September. Maybe August, but not yet. Not yet. And that means the kid is going to get disappointed again. And when the kid gets disappointed, this goes down. Again, that's my analogy. Again, I don't think the Fed's going to take any action sooner than later, and I think they're going to splash water on this rally. My 5 cents. But we'll see. The report today, remember, I'm jumping ahead, okay? Because the report today, for that to happen, the report today has to confirm this report, and it has to confirm this report. If they don't confirm this report, and if employment is good, then we don't have to wait for Fed to start talking. We will start seeing this come off. So again, we're in a very weird position right now where good news is bad news and bad news could be interpreted as good news. But I wanted to go through this with you because it's important. And if this starts coming back down, right here, right, then gold will start firming up and crude oil will keep firming up because that means we have more inflation, and inflation is good for metals and bad for stocks, okay? So I just wanted to explain to you the dynamics right now between crude oil, gold, and TLT. And crude oil is rallying right now based on a technical breakdown. The fact is, if employment is slowing down, then crude oil should be coming down. And that's what caused these two moves right here. So I think unless the report today is really, really bad, I think we're just going to kind of hang around here. But you can't expect gold to start firming up if bonds start going down. Okay. Said those ascending triangles getting narrow is also shrinking. That's right. All right. So I wanted to kind of give you an idea of the commodity market. Okay. And how because crude oil, gold, and TLT bonds, or TLT, whichever you want to look at, the long bond, it's very instrumental to how things are going. Okay. All right. Let's talk a little bit about volatility. Volatility is still around this edge. I think if the report today is positive, basically if the report solidifies that employment is really really solid, that's going to cause volatility to cool off and come back down to here. And if the numbers are really really bad, then volatility is going to start or continue moving higher. I'm not pretty. I don't have any confirmation of what the report will show, but I think the report will show that the slowdown is not as bad as folks thought. That's what I think is going to happen, and I think we're going to get a rally off of that. That's what the market is setting itself up for right now, but we will see what happens. Let's talk a little bit about stocks. This is the S&P 500. On a daily chart, we're at all-time highs, so it's hard for us to use these levels because these levels don't work well when we're making new highs. We have to make new levels, right? So we're literally nosebleed levels around here. We need to break 533 for us to start looking back at these levels here on the SPY. On the QQQ, same thing. We're nosebleed levels. We have to, I'm going to add another line right here. There's a lot of resistance right here. A little bit higher. There we go. So we have to come back to these levels, or we have to start consolidating. Otherwise we're going to be breaking through. So keep an eye on these levels. The level you want to watch on the Nasdaq right now is 460. Otherwise, we're going to continue going higher. And on the SPY, the level that you want to watch is the level you want to watch on the SPY is 533. By the way, I forgot to tell you guys, Cam White has a class called Customer Service Live. It happens every day from 9 a.m. to 1 p.m. Don't miss out. If you have any customer service questions, just go to your members area and click the red button. Also, if you missed my wealth windows, it's a big summer event. If you missed my seasonality class, here is the link for that. And I will be live in the VIP room today, not at noon, but at 11 a.m. because it's Friday. So that's that. Just giving you some links. And don't forget, Cam White, Customer Service Live. So we are at new highs right now. Today's report is going to decide whether we're going to stay at new highs or if we're going to be going down. And it is Friday. Be careful. Fridays and Mondays tend to be a little wacky. More Monday than Friday. Okay. All right. Let's talk about momentum levels real quick. Now we are at new highs right now, but I want you guys to see this. Momentum levels are back down. But Roger, how is it possible we made new highs yesterday and momentum levels are down? We don't have a lot of follow through. We didn't have a lot of follow through yesterday. So again, we're back at that grab and go. We don't have that linear momentum. And also, honestly, stocks are not, I don't want to say overbought. They're not overbought. They're overextended a little bit. They're starting to run away from the 8-day EMA. Let me show you what I'm talking about. See, this is the 8-day EMA right here. And look at where, like, see right here, they're closed. Right here, it's touching it. But right here, we're starting to get a little distancy from it. So I think we need to back up. But again, if that employment report is saying that employment is really, really good and all those reports were full of it, this thing is going to bolt higher. I'm just telling you how it's going to be. Be careful today. Do not trade till 10 a.m. And remember, you got Lisa Cook. And also, another major thing that I want to tell you is this: volume. Volume yesterday was 32 million contracts. Good. Do you hear that? War Dog says Cam has been very helpful in the CSI room, in the CS room. Everyone here should check it out. I agree. Volume, guys. We don't have volume. Look at volume, how volume is dying. You're not going to have huge moves without volume. Or you will have huge moves, but they will be done by retail traders. And they're not good. So in other words, they revert. Retail moves are not sustainable. Institutional moves are sustainable. This is just me showing you a graph of these intraday lines from a different perspective. So again, we have to be very, very cautious today. So as I mentioned, momentum levels are low. It wasn't easy to find good long stocks. I have a lot of long stocks today, but it wasn't easy. Be very, very cautious of the upside right now, and be cautious to the downside. We're entering chop again. Look, 88 stocks making 90-day highs, 42 stocks making lows. Not good at all. This is not good data. This means the market is not in a momentum move, which means not a lot of day trading, mostly swing trading. And if we do day trade, we got to look for little moves because you're not having follow through. If this is less than 100, that means there's no follow through. And you need follow through to make money over time in the market. This means stocks are going up. Ooh, I made a 90-day high and backing off, up and backing off because this was 150 yesterday. Here, I'll show you. Excuse me, 180. See that? We lost momentum. We lost momentum going into this report. That's not a great sign. So I'm not really all that bullish on the market right now. I'm kind of neutral on the market. All right, let's look at these scans here. How are sectors? We've been consolidating. Let's see if our sectors are getting better. Well, semiconductors are back. Remember, they were in the lowest spot. Now they're back in the last 5 days. This is just the last 5 days. Semiconductor, highly speculative. Healthcare, highly defensive. Right away, you have a mess. But did I not tell you earlier this week in the Telegram channel that I'm seeing healthcare breaking out? I did. I told you healthcare, and I also told you consumer staples. But aside from that, just take a look at this. Communication is here, semiconductors here, retail's here, QQQ's here, Bitcoin's here, real estate technology. Technology should be right here. Health should be right here. Consumer discretionary is down here. It should be up here. So again, you don't have a really mixed bag, but you don't have good, things are all over the place. Crypto's over here. Retail's over here. Consumer discretionary is down here. Consumer staples is next to technology. All you need to know is this. Healthcare doesn't belong next to semiconductor, and the Dow and basic and financial don't belong next to consumer discretionary, and technology and consumer staples are about as far apart as you could be. So you could very clearly see we don't have congruency. You don't have congruency here. Congruency would be if semiconductor, communication, QQQ, technology, Bitcoin, consumer discretionary, and maybe even the Russell 2000, they would be next to each other, and they're not. So you have a complete mixed bag. This tells us, and what happens when markets are fragmented? What happens when markets are fragmented? Well, let me show you what happens when markets are fragmented. You don't get a lot of momentum. You don't get a lot of momentum. You get more of this. You need to have things together. It's like imagine you have a classroom. Hey, Rebecca, good morning. Imagine you have a classroom, and imagine in that classroom, you want the kids to talk to each other. Okay? You would put best friends together in a class. Well, what they're doing right now is they want to make sure nobody talks to each other. So they're putting everybody separately. So and imagine you have a communication class and you're putting all of your best communicators away from each other. The class is going to get really quiet. Okay? Do we charge or hibernate? Carlos, we will see sooner than later. But hibernation is not such a bad idea right now. My point is, if you want to see synergy amongst sectors, you need to see them next to each other. If you don't see tech, for example, how in the hell can you have a legitimate rally when technology and chip stocks are doing opposite things? You don't think they're related to each other? Or how about when financials and consumer staples are doing something totally different, right? So yeah, that's Walter. You are so right. Building value, distributing value. So we need to consolidate and build that value again, bring everything together so that they could be next to each other. So the best friends can be next to each other so they can help each other. And let me explain to you why they need to help each other. Because you may not understand the reason why they need each other, but let me explain to you why they need each other. Most of the markets are driven by ETFs, not individual stocks. Most most ETFs, tech ETFs, QQQ is an ETF. All these ETFs, they don't just have chips. If you want a chip ETF, you buy SMH. But if you want a there's like a gazillion tech ETFs. Well, these tech ETFs, these tech funds, these mutual funds, these ETFs, they buy tech stocks. They're not buying chip stocks, they're buying tech stocks. So if they buy a computer stock and they buy a chip stock and the computer stock goes down one day, and the chip stock goes up one day, the fund is going to do this. They don't want that. So my point is, it's very important to see related sectors next to each other because institutions buy related sectors. So you can tell if they're not next to each other, then there's no strong institutional flow because an institution is not going to go buy chip stocks and not buy tech stocks. Do you see what I'm saying? And if what I'm saying doesn't make any sense, just think about it. Common sense. Common sense. Look, let me show you what I mean. See, look, the same fund that's going to buy healthcare, right, is going to buy consumer staples. They're going to buy, it's a blue chip fund. So they're going to have consumer staples and healthcare and real estate and materials and industrial. Well, if material and healthcare are not next to each other, if one is going up and the other one's going down, it's just going to cause this. So remember, institutions, pension funds is what's driving the markets, and they're always getting in and out of funds. They're always getting in and out of funds. Okay. And when they're getting in and out of funds, they buy related sectors. So if you're seeing a fruit salad, that means there's none of that is happening. And that means institutions are not engaged. Do you guys understand? Now, if institutions are not engaged, how do you get follow through? You don't. You get this crap right here. You get 88 stocks making 90-day highs and 42 stocks making 90-day breakouts. You get this. And when you get this, they all completely get fragmented. They get out of whack. I know it's important for me to teach you this. So, all right. I forgot to mark up my sheet. So we're going to mark it up together. Okay. Basically, E-minis are up 0.2. NASDAQ is up 0.8. There's nothing going on. Everybody is waiting for the report. This is complete and utter randomness. Okay. Complete and utter randomness. Let me just highlight this. Everybody's waiting for today's rate hikes. Yesterday's session, 5 below. I've been talking about the stock nonstop. It dropped 10%. This has been on our short list for probably 3 months. I dare you to tell me it ain't so. All right. Lulu also dropped, which is not good. I would be a few folks asked me if I think Lulu is done or if Lulu's going to turn around. It's hard to say right now, but I would be looking for a gap fill in Lulu. I wouldn't be, I don't know right now. It's just too hard to say. Yeah. You guys let me know what the numbers are. You guys are my jobless claims. So, I mean, look, this thing went from 229,000 compared to 220,000, and the bond market it's not reality. Okay. This is not reality. But let's highlight this. Also, which nobody talks about, the trade deficit has widened. Notice Powell never talks about this. Well, this is a big long-term pink elephant in the room. All right. Meanwhile, with all of this slowing down in the economy, the kid's getting some crazy ideas. Now he thinks that there's a 22% chance, according to the bond market, that they're going to be lowering rates in July, and actually a 2.3% that they're going to be doing it later this month, which I think is asinine. And now there's a 67% in September. Now, this is more like 22%, maybe 30% based on what I'm seeing right now. But 22% that they're going to have it in July, I think it's zero. And I'm only going by what the Fed has been saying. Today, we got non-farm payroll. They're looking at 175,000. That's going to be the big number we need to pay attention to. Unemployment report is going to be huge today. That's going to be big number. And again, don't just look at the number for 5 minutes afterwards. Look at the number for the next the next hour or two. Europe, a little bit down, not really doing much. They're keying off of the U.S. report. China closed just above flatline. Property and retail stocks outperformed. They're still struggling with they're doing good with their exports, but they're not doing well with their imports. Their imports suck. But the exports are getting a little bit better. And if the exports are getting a little bit better, that means they're doing slightly better. Japan closed slightly lower. Financials and auto stocks lower. Everybody's waiting to see what happens here. A fair communication release Friday indicated Japanese household spending rose for the first time in 14 months compared to previous year. That's because interest rates are going higher. They have to spend more money because interest rates are going higher. And DocuSign came out. This stock BRZE was on our long list. It's up 14%. Otherwise, not much here. Triple M got upgraded. We may see a little bit of upside in industrial, but I wouldn't really. All right, there we go. All right. There we go. What did I tell you guys? Strong. Whoa, and there's the bye-bye, Mr. Bonds. Bye-bye. Have a nice day. Bye-bye. Why? Because this number and this number did not give us accuracy, and the kid got too excited too fast. And the market will now go lower as a result of this. And you could see. That means the kid got a little overexcited. Of course, yield goes higher. U.S. unemployment rate actual 4. Yeah, that's not the number. The key number is 272 versus 170. That's a key number. Bye-bye, Mr. Bonds. Bye-bye. This number just instantly went down from 22%. Isn't it nice when we do this real time and you guys can see this and we connect all the dots together? Yes, of course, U.S. futures dropping. Is anybody surprised based on everything I just said in the last half hour and what you're seeing right now? Yeah, I had a suspicion that this number would be better than ADP because the Fed is not ready to lower rates right now. They're not ready to do it yet. It hasn't updated yet. But it's not. Look right there. Boom. Boom. Boom, boom, boom. All right. So we already know that the number is disappointing. The bonds, look at the bonds on an intraday. Now I'm going to ask you guys something. Does Uncle Roger help you connect the dots and understand why this is happening and the actual reaction and all that stuff? That's what I want. And the bike and all of these examples and everything I just showed you and how I talked about how those reports may not impact what happens on this report. How helpful is that? Good. Oh, by the way, by the way, I got another surprise. Because of this, we should start seeing a little more. We should start actually seeing some upside on gold and crude oil because of the economy slowing down. That's inflationary. Thank you, guys. And again, I warned you. Oh, and there's the S&P coming down. I warned you. It's one thing to say something, and it's another thing to say something and back it up in real time. It does, Wayne. It does. All right. Well, let's see what happens later on. I never used to watch the report, just price action, but have learned so much from you. And folks, Penny used to be a professional trader. She used to teach trading. Come on, Penny. You can tell people. You could brag a little bit. Good. So I think we're going to continue talking about the kid and the bike. No, it's not bad for gold. It's not bad for gold. It's actually good for gold Because if the market goes down, people will be putting their money in gold. Gold is a defense mechanism. That's what I just said. That's what I just said. It's not bad for crude oil or gold. It's not bad for crude oil or gold. I don't really know. Gold was already quite a little bit lower today, but when the report came out, it's not. This is not bad for gold. Yeah, this is different. It's what Rich just said. Seeing is believing. It's one thing to talk about stuff, and it's another thing to know exactly what you're looking at and how it will affect the market. All right. Glad you guys enjoyed that. I'm glad I was able to do that. All right. All right. So I talked about momentum levels. I think the only thing to talk about now, and let's not get too excited because we still need to see what the Fed speaker says. We need to see, but this is not this report completely takes out this whole jobs are weakening, employment is weakening. Now Fed can't say that. They can't say that next week, can they? What are they going to say? Non-farm payroll, it's getting worse. They're going to say unemployment is off by from 3.9 to 4%. Woo! Now, this is telling us that employment is solid, and this is telling us that the kid can kiss the 22% back, and this is going to go down to 15% on Monday, and then back to 5%. So, and then remember, we have CPI and PPI next week, and if those numbers are solid, that's going to also bolster the fact that they don't need to do anything with interest rates right now. So remember what I told you about the bond market right here, right here, right here, right here, right here? It looks like I might be right again. So good. Thank you, guys. Hey, the best thing you could do for me is send me a nice email because we use those in our broadcast. If you guys want to thank me back, send me a nice email to Roger@RogerScott. And if you say something nice about Cam or Matt, you get brownie points. All right. Just wanted to show you guys the markets are not magical. They're not mystical. They're not efficient. And sometimes we could see something very, very clearly far, far in advance, like nonsense like this. So the markets are not nearly as efficient as you guys may think they are. But with this said, by the way, I know that that this is also not really bullish for the stock market. I shouldn't be so happy because this isn't really great for stocks. But it means that the Fed is not going to take any action anytime soon. All right, now let's talk about stocks. I'll try to get you guys out of here earlier today. As I said, there's not a lot of momentum today, and it is Friday. It is Friday, okay? So we got to be extra careful. Let's go to Roger's demo right here. Oh, I can't wait to see how the market unfolds today. I'm doing the short side first. Penny, were you the penny trading back in 2000 penny stock? Translate to institutional money unloading. It means no, Carlos, not necessarily, but it changes the trajectory. It changes the trajectory of the market to basically the same markets continuing to move the same way they were. This isn't going to impact stocks all that much. It'll cause more choppiness or maybe a little bit of a downside, but definitely not upside. This will stop stocks from going higher, except, AI stocks and chip stocks, which are not based on real value, but value stock. This is going to cause the blue chip stocks, folks, to struggle. You know how we've been having that. Good question, by the way. Good question. Who was that? Carlos. Good question. This is going to cause institutions to, how we've been seeing a strong tech and a weak blue chips. It may cause that to continue because this is not good for blue chips. All tech has to do is make a bigger carrot and say, ooh, we're coming out with a new chip next year. And it'll be like Elon Musk tried to do with earnings. We're coming out with a new car in 5 years and it's going to be cheaper. What car? What's the name of this? Chips get away with that. Car makers don't, but tech companies do. Tech companies can say, we're working on this chip and it's going to be 4 times faster and the market will start pricing it in. But it's very hard for blue chips to do that because blue chips are based on value and interest rates are being increased as we speak right now. And if yield is getting higher, that puts direct pressure on blue chips. Sorry, guys, I'm getting a little too excited about this, but anyway, short stock. I get a little too excited sometimes. I really enjoy what I do, and I love helping you guys. Walt Disney. See, when a stock like Disney's trading below the 100-day moving average, below the year-to-date VWAP, that's not good. You see, that's not good. And remember, we're in summer months. Summer months are typically good for amusement parks. Seasonally, they are. They are. They really are. NTNX. Be careful. We're close to the 200-day. This could be maybe a good scalp, but don't go long term on this one. Roaring Kitty speaks noon today. That's funny. Yeah, Cam is the man. Do you guys have any idea how much easier Cam makes my life? I don't think you guys even have an idea. Dollar Tree, another bearish stinker. We talked about this. Cam, they're having problems. They're actually adding another wing, but they're having problems. They're too expensive. They're getting a lot of competition from Universal Studios. And their movie business is not, their streaming platform is sucking it big time right now. Merge with Paramount Plus and Showtime, guys. If anybody here is listening to me, merge with Paramount and Showtime or merge with Netflix. But Disney needs to sell that platform. They're having problems. They're having problems. They're not, I think, okay, I don't think it's their revenue. I think it's their management. I'll be honest with you. I think they need to change their management. I've said it. And I don't get really critical on management, but if you can't make money in this day and age with a company like Disney, that's not good. Okay, we're breaking the 100-day moving average, and we're breaking the year-to-date VWAP, and we're still far enough from the 200-day moving average here. Okay, so there's something here. Now that we've had that VWAP and the anchored VWAP class, you could start looking at things a little differently. Rich says, since Cam started that room, you no longer have questions about how to install. Exactly. And other questions too. And other questions too. Let's continue this. Snow. It's not snowing for this stock, I'll tell you that. And don't go anywhere. After I do this, I'm going to check on the market one more time. Builder. I gave you guys this stock a few days ago. I'm still bearish on this stock. Nothing changed. I'm still bearish on this stock, just FYI. Yeah, Matt is in, but he's in the office. He doesn't come to my house. I'm in the house. I finish this and I head to the office and I try to make it in time for the opening bell. And that's where Matt is. He doesn't work in my house. We work from the office together. We're like the few people that actually comes into the office. Adam comes into the office. Steven comes into the office. T-Buzz like once a week, twice a week. Look at the stock. And it's still touching the 8-day EMA. And we've been bearish on the stock for quite some time, by the way. All right, let's continue. RHI, another stinker. This is not good for retail, by the way, because yield goes up, interest rates go higher. And if interest rates go higher, it's not good for retail. Look at this stock. And still sticking to the 8-day EMA. There we go. I'm going to be ordering that computer screen, that portable computer screen this weekend. I didn't know Graham had a lot of people have them. A lot of folks who we talk to have them. So thank you for all of your feedback for that. I appreciate it. Oh, JDR, if you want Matt to respond to your email, you need to CC me or he will never respond to your email. He's just too busy. You got to CC me. I got to micromanage him. Not because he needs micromanagement. He's just too damn busy. So if you ever want something from Matt, you want to CC me. And then I stay on him. And my email is roger@rogerscott.com. Just CC me and I'm like his pet. I pester Matt. I'm a nudnik. J&D, I'm a nudnik. I pester the guy. He's really backed up. Email, CC me, please. Pool, another one. And IEX. This is the last one. There was no difficulty finding shorts this morning. It was not easy finding longs. All right, let's look at stocks, how they're doing. Oh my goodness gracious. Look at this. We were positive and now we're down 150 on the net. Oh, who would have believed that? I wonder who would have predicted that one. And then what about bonds? Let's look at bonds. And then we'll go through our long ones. Sorry, guys. I just want to be a little selfish and see for myself what's happening here. Oh, baby. Yeah. Full basis point down. Almost a full basis. Yeah, over a full basis point right there. It's two screens, Walter, one on each side. Check out the Telegram channel. I posted a bunch of pictures. That kid right now, full basis point. He's crying right now. He's crying and he's very upset. That I don't know, Rich. Your computer has to have a certain HDMI port. That's something you're going to have to find out. Yeah, of course VIX is up. That, of course VIX is up. How can VIX not be up based on this? Boom. All right. Let's do the long side now, shall we? I was struggling with the long side. I'll be honest with you. It wasn't easy to find stocks on the long side, but I do have some for you. Yeah, it depends on your computer, Rich. I like Alphabet still. Be careful today, guys, going long. Be careful going long today. Be careful. This is the first time we're talking about this stock, or maybe the second time. This is Reddit starting to break out a little bit. We do sometimes talk about speculative stocks too. That's right, Sylvain. But the better question is who sold puts on it yesterday in the VIP room? That's my question. Look at this. Agree Realty Group. Look at that. That's nice. And obviously, this is because the hope that interest rates is going lower immediately is coming in. There you go, Walter. You guys crack me up. ZTS. Be careful. We want to wait for this to cross the 200-day. Sometimes when I give them to you, I use stock fetcher pre-open and I don't have the 200. So we want to wait for this one. We don't want to do anything with this one until it crosses the 200. But then it looks good. AZN, AstraZeneca. Matt cracks up when he hears how I pronounce this stock. I wouldn't be doing anything today on it, but be careful of the long side today. Be careful of the long side today. Today is definitely a day for defensiveness. Now, I've got to ask you a question. I want to show you guys something. This is me in the VIP room yesterday. I want to show you guys something. Look what I wrote yesterday in the VIP in the pit. I don't want to take this position because hold on. I don't want to be caught in tomorrow's report. That right there, that was at 1:00 yesterday. I sent people in the pit that I don't want to be caught in tomorrow's report. Just ahead of time. Yeah, J&D, CC me. I like the stocks, CHRY. LPX, this is a defensive stock right here. This is actually a defensive stock. LPX. BK. Bank stocks do pretty good when things are moving, when interest rates are going higher. Just FYI. I've been having my eyes on Goldman Sachs lately. It has to go above the 8. It has to go above the 465 area. Okay. GE is a defensive stock, yes. And military spending isn't impacted by the economy all that much, by the way. A few semiconductor stocks. I like Tower Semi. It's starting to come up on my list. Brian says trade. Brian, what do you says you should be doing well? Oh, yes, it should be doing very well because we went in the money. um, and Micron. I like Tower and I like Micron right now. I like these stocks right now. Now, folks, today's Friday. Volume is low. We just had some eye-opening Fed data that's telling us that the kid ain't getting that bike. Okay. Um, we got to be very, very careful today. Also, we have Lisa Cook speaking today at noon, and I'm very interested in what she's going to say. You're welcome, Ricky. I want to hear what she has to say. Uh, yeah, it doesn't make much sense, PD. It doesn't make much sense. But gold was already down beforehand. Remember, there's not a okay, guys. It's not a direct correlation with gold, energies, and interest rates. It's not a direct correlation with bonds and interest rates. It's 100% inverse. With U.S. dollar, gold, and there could be something happening with the gold market, basically. You know what I'm saying? So again, we gotta. But typically, lower prices on stocks. You guys know lower prices on stocks, which we're seeing right now, clearly causes gold and defensive assets like commodities to rise. It's a, but it doesn't mean it happens instantly, and it doesn't happen, minute by minute. PD, we can't always get it, down to down. And I did, by the way, in my defense, I did tell you guys. Um, let's see what's going on. Let's see futures. Is my internet dead or something? No. Metals. Let's see. Here's the thing. I want to just go over gold real quick. So first of all, before this news came out, just sorry, PD. I don't know why I'm calling you PM. PD. Before this news came out, gold did this. So there was already something going on for the gold market. Yeah, no. I hear you. So does my wife, by the way, PD. So there was already something going on. I would wait. We may start coming back up, but this is the only thing that happened since the announcement right here. We were already down here beforehand. So there may be something going on for gold. And it's only down about 2%. It's nothing crazy. What I'm concerned right now is the financials. I'm concerned with the financials right now. Like the 10-year. That's what I'm concerned with right now. And if this is down, that's not good for the market. All right. I had a fantastic session with you this morning. I'm so glad, or I'm hopeful, that I'm able to keep you guys out of trouble. Don't forget, we have a class today. You can watch it on a replay. My seasonality class. My 5 stocks are in it for the summer months, and it talks about seasonality. I have my VIP room at 11 a.m. It's actually a really good time to have it at 11 a.m. because Lisa Cook is speaking at noon, so we can all hang out and hear what she has to say a little bit later. Bitcoin is in its own world. It's not defensive. No, Bitcoin is not defensive. Bitcoin is speculative. I hope you guys have a fantastic day. I hope you guys have a fantastic weekend. If you guys are getting something out of this, send me an email and let me know. Let me know if you like this better than the VIP room, if you like it worse, if you have send me an email, say hello. I hope you guys have a fantastic day. Stay out of trouble. I'll be updating you all day on the Telegram channel, and I'll see you guys later. All right? All right. Carla, there's other fish in the sea. And we're not done with GE just yet, I promise you. Bye, guys. Have a great, great weekend. Stay out of trouble and be careful today. Don't be a cowboy. This is not a day to be a cowboy. All right? Bye, guys.